Hi, this is Carson with M5 Commercial Funding. Pleased to welcome everyone here today to our webinar, which is on Joe Martisich's favorite niche for 2015 in commercial lending. And at this time, I'd like to welcome Joe. Joe's been involved in lending for nearly 30 years as both a loan officer and has also built many lending operations from the ground up. He actually has extensive experience in commercial origination underwriting, and he's very passionate about finding new products and for his customers and for his partners. One of Joe's favorite niches for 2015 is equipment financing. And that's what he's here presenting on today. We'd like to welcome Joe, and thanks for being here with us, and I'll turn the time over to you.
All right. Thank you very much, Carson. And I appreciate everybody being here. Very excited about our webinar today. And yeah, my favorite commercial loan niche for 2015. This is a great time to be in this business. There's so much money flying around. There's new products, new programs. The economy is getting stronger in terms of performances on P&Ls and so forth. And so there's a lot of money to go around, a lot of good borrowers out there. It's a great time to be doing the commercial mortgage business and the commercial lending business in general. So I'd like to talk for a couple of minutes about my favorite niche in the commercial lending business for this year, and that is the equipment financing business. Now, that might sound a little bit strange to you. You know, I'm a mortgage guy. We've done, millions and millions of dollars in revenue in commercial mortgages, hundreds of millions of dollars worth of deals. So why commercial equipment financing? Well, we're going to get into that in just a moment. But first, let's talk about how I started in commercial. Just as a brief intro to those of you who have not heard me speak before, and some of you probably have, so I'm going to keep this short. But I was in the residential mortgage business for a number of years, built up a company. We had offices in 10 states, doing business in 17 states, couple hundred employees, and we were a direct lender. We had our own warehouse lines, our own funding capacity. We were selling loans in bulk pools and built up a pretty good business there. And time came to sell that business, sold it for in the 7 figures. Once I sold it, worked for them for another couple of years, but I had to move on. It was tough for me to stay there, to work for somebody else under the circumstances. And I had to find something else to do. And frankly, I've never been good at anything else except loans. And I had a non-compete, couldn't be in the residential business, so I went out and started in the commercial loan business. And to be totally honest, I really crashed and burned all over the place for about the first year or so. I got hardly anything done. I'm not sure if I got anything done. And I made about every mistake you could possibly make. And some of the stories would probably raise the hair on the back of your neck. But anyway, let me just say I was lucky in that I finally found a mentor. And that changed everything. Someone who was able to kind of guide me through, help me get deals done, learn the ropes. And as they say, the rest is history. Since that time, have done many hundreds of millions of dollars worth of deals. My largest revenue year in fee revenue was about $5 million in 1 year. So it's been a great business. It's been very, very good to me. But the real message and the real story is I was a residential loan officer and then the owner of a residential mortgage company, and then I got into commercial. And I was a dyed-in-the-wool, hardcore residential guy. And so the real message is, if I can do it, you can too. This isn't rocket science. It's just a little bit different than what you're already doing. Yeah, there's a certain knowledge base and skill set. But that's what we're here to provide for you. And as I found a mentor, I'm hoping that we can also be that for you. And that can make all the difference. So a little bit of background there that I hope is helpful to give you encouragement to know you can do this. So let's talk about what is equipment financing and why is it my favorite niche for 2015. Well, first let's define what it is, and then we'll go into the why. So it is financing for the acquisition of new equipment for a business or a municipality. It can be almost anything. It's easier to give examples almost of what it isn't than what it is, because there's a few restricted industries, a few restricted equipment types. We're going to get into those in more detail a little bit later in the webinar. But I mean, you can do anything from office equipment like cubicles, computers, servers, desks, chairs. You can do trucks and all kinds of transport vehicles. You can do machine tools, you can do printing presses, you can do restaurant equipments, you can do construction equipment. Virtually anything you can imagine can fall into the realm of equipment to be financed. Anything that a business uses to operate the business but is not inventory. In other words, it's not something for the business to resell, but it's something that the business uses as a tool to make money. That is equipment, okay? And businesses are needing money for equipment all the time to keep running. If they're growing, they need more equipment. They're always having to replace old equipment with newer, more updated equipment, or when something wears out. So it's a constant source of need for businesses to need equipment. So that, in a nutshell, is what equipment financing is about. Now, the scope of this market, it's absolutely ginormous. It's huge. There's so much need for this. There's so much demand for this. It's a fantastic opportunity. Now, why is it my favorite niche for 2015? First of all, I like it because, and the bullets are going to probably be a little bit behind my voice, just some technical issues here. First of all, you only have to take a one-page, 8.5 by 11 application, one side of the page, in order to get a lot of deals done. So you don't have exhaustive amounts of forms and paperwork like you do with commercial mortgages, with SBA loans, etc. This is really, really about as simple as it gets. Matter of fact, to tell you the truth, it kind of harks back to you know, when I was years and years ago in the residential business. I was in the subprime lending business, and we used to take an app and fax it around. This is back like in the 80s and 90s, so that just tells you how old I am. But we could take an app and pull a credit report, and we'd have those old squiggly paper fax machines with the thermal paper. We'd print that out. We'd fax that over to somebody, and a couple hours later from some finance company like Beneficial or Associates or someone like that, we'd get an approval, or at least a conditional approval on the loan, and you know, we could charge 3, 4, 5 points in premium, that kind of thing. And it kind of reminds me of the simplicity of those days. 8.5 by 11 application. We don't, on deals up to $100,000 on our own in-house program, where we actually, dock and fund those deals, and up to $250,000 with programs that we have access to that we can syndicate or what have you. We can do it without any financial statements, without any tax returns, without any additional income documentation, financial documentation, except the application and 3 months of bank statements, up to $250,000. So you talk about simple, quick. The approvals can turn around on the same day. If you do one of these, what we call app-only deals with just an app and bank statements, we can usually, if you get it to us in the morning, normally have you an approval later that same day, as long as you give us a thorough submission. You're talking at the outside 24 hours to get something approved. And on even deals with full financial statements, so deals that are larger, say over $100,000, or as I mentioned with our extended programs, something over $250,000, or something where we're looking to be even more competitive on rates, even once we get a full financial package, the tax returns, the financial statements, et cetera, it takes 24 to 48 hours to get a full approval. And then we skip straight from that to documents. So let me just mention, with the commercial mortgage industry, of course, you usually get to this point, you get an approval, and the next step is you get what we call an LOI, or a letter of interest. And at that point, the borrower can kind of see what their terms are, and you can go ahead and collect a deposit from them for appraisal, for other third-party reports, etc. And then they sign that, they give you the deposit, maybe 30, 40 days later, you finally get to final approval and closing and so forth. Well, with this, you go straight from the approval to closing docs. You never have to collect a deposit, you never have to get an LOI signed, you never have to do third-party reports like appraisals, environmentals, title, etc. You go straight from approval to close. So this is a really quick turn product, and you never have to get money out of the client until it's time for them to close. Now, another reason I love this equipment financing, I'm just going to tell you, on our in-house program, and this is probably going to be your favorite part, I think it is mine, we actually will pay you as a broker up to 7 points in premium on these little app-only deals up to $75,000 or even $100,000, and then up to 4 points in premium on deals up to $1 million where we use full financials. So premium pricing, nothing's disclosed to the client, and there isn't any kind of good faith estimate. There's no TIL. There's no RESPA at all. There just isn't any of the typical rules and regulations or red tape associated with doing a mortgage. And of course, a lot of that stuff applies to commercial as well. But in this case, you can pick up 7 points in premium on smaller deals and 4 points in premium on larger deals. There's zero conflict for you to do these deals because it's not even a real estate-based loan. The regulations for this are basically non-existent in all 50 states. Now, I'm not an attorney, so let me just give that disclaimer. I'm not giving you legal advice. This is something you should verify with your own legal counsel. But we are able to do these deals everywhere without any kind of licensing or regulation. And so, in short, I want to just say this is probably the best dollars for hours that I know of in the lending business as far as your ROI, your return on investment for your time, best dollars for hours. Absolutely just an interesting niche to be involved in. So let's talk about the cans and can'ts. What types of deals can you do and can't you do? All right. So first of all, you can see this is a page out of our originator program guide, which is available at the m5.com, m5funding.com website. You go /forms, or you can just click on the Forms tab, and you can actually download and have this in your hands. It's a, a document. There's a handful of pages in it, and it talks about exactly what the guidelines are. This is a really, really defined box. It's another thing I love about the niche. Unlike commercial mortgages, which, the deal can wind up 180 degrees from where it started by the time it's over because of all the things you find out through the due diligence phase with third parties and everything else. And there's just so many structures, so many different potential structures there, and difficult to really get your arms around the programs and what makes one product appropriate for a deal versus another. But with this particular type of program, there's a very, very well-defined box. So here's what we can't do. You can take a quick look at the restricted equipment types. You can take a look at the restricted industries on your screen here. This is being recorded, and you'll be able to go back to this. But restricted industries are bars, collection or telemarketing agencies. It says fitness/gyms. Actually, even though in our in-house program we don't do those, we do have ways of doing those, so we can do gym equipment and so forth. ISP providers, application service providers. I'll mention just in passing that we had a deal for a storage facility, a digital or data storage facility, and what they wanted was racks and servers and wiring to be installed and so forth, some cooling systems, and all of that was okay. So when it says ISP providers, that just reminded me, just the range of what can be done. Funny you might see here, mortgage brokers, property management firms are typically not able to do this, although again that's on our in-house program. That is not necessarily the case. There's plenty of other extended syndicated products that we can work with where we can get that done. Cash advance companies, radio and television stations, again that's our in-house product, but we can get those done. Restaurants less than 5 years in operation. So we can do restaurants, but they have to be around for a while and stable. Gaming, gambling, that kind of thing. We can't do casinos and so forth. And you'll notice there's a bunch of restricted equipment types listed. Solar panels, kiosks, inflatables, hazardous waste equipment. I guess this gives you a little bit of an idea. We're not going to go into too much detail here, but this gives you a bit of an idea. If these are the things that can't be done, what all can be done, because essentially everything else that's not on this list can be done. So, and you can see, by the way, briefly there's a little bit of a pricing box in the bottom there that we just skipped past. And so this tells you what the credit scores are, what the time in business is, et cetera, for somebody to qualify. And so let's talk about how to submit one of these low doc deals, because again, one of the reasons I'm excited is that this is so simple. For application only, you can see up to $75,000 requires the client to have 2 to 3 years time in business. That's what the TIB there means. They have to have at least a 635 or higher credit score, mid-score. And all we need is a completed signed credit application, which you can get on our forms page. It's 8.5 by 11, one side of the page. Super simple. A brief write-up, and that write-up is going to talk about where you got the deal. That's where it says origins of transaction. What kind of business it is, what do they do, what kind of equipment they want, what's it going to do for the business, how are they going to be using it, the cost of it, and the total cost that they're looking to finance. So in other words, if we're financing something and they're financing 3 other pieces through the bank, we want to know the total amount of credit being applied for. And we need 3 months bank statements. You can kind of skip past the Secretary of State or tax schedule. We generally don't need that at the submission stage. We get it later. So really we're just talking about an app, a quick write-up so we know what we're trying to do, and 3 months bank statements. Okay? With those 3 things, we're able to turn around an approval in usually 4 to 6 hours, and if we've got a complete write-up and app, that's what will happen. If we need some more information, we might go back and forth asking a few questions. Maybe it'll take us 24 hours or, I mean, at the very outside, a day and a half or something to turn around. So you get a very, very quick approval on one of these application-only deals. We're not verifying income. The bank statements are not used to do that. We're looking for other things. So it's just a simple process to get a business up to $75,000, assuming they've got 2 to 3 years' time in business and a 635 plus score. Okay. Now, if you're looking to do something that's a little bit larger, let's talk about how to do those deals. This is for $100,000 on up to $1 million, and frankly, even up to multi-millions. There really isn't a limit. You know, a good friend of mine in the industry just financed a deal for $300 million last year. And that's not a, I didn't misspeak, $300 million. So really, this is a huge business. We've done things like, you know, we've looked at large oil field deals and aircraft and so forth. So really not a limit to what you can do. For those kinds of submissions, you use the same application form. You use the same, you know, 3 months bank statements. And then in addition to that, depending on the size of the business, and most of these are going to be, you know, mom and pop businesses, so we're going to work with tax returns as opposed to audited statements. But it says last 2 years corporate returns are audited statements from $100,000 to $250. Audited is usually going to come into play when you're dealing with a really large organization and they have those on hand. Don't worry about that. We don't need it. If they've got tax returns, they're a smaller business, that's fine. 2 years tax returns, we need year-to-date interim financial statement, and we need a debt schedule with that. And debt schedule is a form that we also have on our forms page. We need the last 2 years personal tax returns on all the guarantors, and we need personal financial statements on all the guarantors. Again, we have a form for that. So pretty simple, and the difference is if you go above $250,000, let's say you're going up to $1 million or $1 million plus, you just go with the last 3 years corporate tax returns or audited statements and last 3 years personal tax returns on the guarantors instead of 2. So again, once we get that, what's going to happen? Well, we get the full package. About 48 hours later, depending on the size of the deal, say it's a multi-million-dollar deal, 48-hour turnaround, you get notification of an approval. We get back our definite pricing. We decide what kind of premium you want to build in. We add that to it. We go ahead and we go to closing docs as soon as the client is ready. There's not going to be a step where we have to collect some kind of deposit or have an LOI signed or anything, although we can put out a proposal if they need to see that to get terms. We're fine to do that as well. So really, really simple process. Now let's talk about the best part of this whole thing, and that's how you get paid. So we're talking about a very little amount of work compared to what you're probably used to doing. Let's talk about how you get paid. And again, this is maybe my favorite part because this is not a regulated industry. And premium pricing is almost a thing of the past in most of the commercial mortgage world. There's obviously some products where you can do it, but it's very limited compared to what it once was. I'm remembering the day when I was doing, you know, loans on apartment buildings for $8 million and making 3 points in premium. And that was back in 2006 and 7 and so forth, and those days are gone. But with this, as I mentioned, on an application-only deal up to $75,000, you can still earn up to 7 points. And on the larger ticket deals, you can still earn up to 4 points all of which is in premium. So example A, you got a little $50,000 deal, maybe takes you a day or two to turn around to get an approval, a couple days after that to close it. Usually it funds a few days even after that, simply because we're waiting for equipment to be delivered or installed, and we have to verify it's been received. And anyway, we'll talk about that process at some point. But let's say you charge 6 points on this deal, that's a $3,000 premium to you. Example B, $200,000 equipment financing transaction. Let's say you got somebody a couple of oil trucks or some printing presses or whatever it may be. Let's say you decided to charge 4 points in premium, so we build that in for you. That's an $8,000 commission to you. So that's an example. And by the way, we can pay that directly to you, to your entity, whoever you want to direct it to. We just need the proper W-9 so we can 1099 the right party, because again, there's not any kind of regulation or licensing. There's no issue with this. So let's go ahead and move on to the marketing and how you get deals. Okay? We're going to talk about how to find all the equipment finance deals that you can handle. And I'm directing this to those of you who would like to find an additional stream of income, perhaps, while you're still doing residential mortgages. I'm directing this to people who might want to actually start there but segue more and more into doing this and relying less on doing the residential mortgage loans. Whoever you are, you can put a little bit of time into this. You can put a lot of time into this. But let's talk about how to market and get these. And luckily, if you've been to my other webinars, you know that the first method here is the same as what I would recommend if you're going to get commercial mortgage loans. So the two work very, very well together. It's a beautiful thing. And that's to go to bankers. So bankers' turndowns are a great, great source. A lot of the smaller banks don't do equipment financing at all, the community banks, etc. And we have already talked about in previous webinars the reasons that bankers do turn down perfectly good deals all the time, even if it is something that they do. I'm not going to get into that here, but if you want to listen to that, we've got that available on previous recorded webinars where we talk about that. But you'll get turned downs from these bankers because they don't do it, because they're just, they've got too much in their portfolio, because it's outside of their lending territory, because they can't verify the income, and you've got an app-only program, et cetera, et cetera, et cetera. There's a lot of reasons for bankers to give you these, and a lot of times they can do it in conjunction with another loan that they're offering. So, for example, let's say that they're doing a small real estate loan for this party, but they can't get them all the money that they need. And part of what they want the money for is a bunch of cubicles and computers, et cetera, for the office. Well, you can kind of team up with the banker and provide that equipment portion without any kind of income verification to get that client that money above and beyond what they might be able to get from the banker alone. So let's talk about the next source, vendors. So what we mean by this is somebody who sells any kind of equipment. Like, for example, we had a conversation with somebody this morning that sells computers and hardware. Well, whenever they make a sale, 20, 30, 50,000, 100,000, whatever it is, for a bunch of computers, their clients have to walk in and pay cash for that, because the vendor's not going to let them pay them over 5 years or 3 years or 2 years. They need their money. So what we can do is be their financing source. And really, a vendor to us as an equipment finance broker is exactly the same thing as a realtor is to a mortgage loan officer. It's just a great source of repeat business. They're closing sales all the time, and they need somebody to help finance those sales so they can get them closed. And unlike in the real estate industry, in this case, you actually could pay a vendor if you want to. Some of them may expect it, some of them don't, but there isn't any kind of licensing issue or disclosure issue with that. So vendors are fantastic. I mean, literally, you could line up one good vendor who's making a bunch of sales each month. You could get 3, 4, 5, 10 deals a month out of one vendor and have a fantastic income with one relationship. That's really possible in this business. Accountants are a great source. They want to help their clients. They know which ones have the tax returns that are able to qualify, and oftentimes the clients will go to their accountant when they're applying for a loan someplace and ask them to produce up-to-date tax returns. Well, if that loan runs into problems, the accountant usually knows about it. And oftentimes it's because they can't qualify due to their financials not showing enough income. So you can come to the rescue with application-only financing. And again, even though on our in-house program that's up to $100,000, we can really go up to as much as $250,000. Okay? Oh, I think we skipped forward just a little bit. And that's okay, because we're going to talk about, let's go back for 1 second. Okay, sorry for the technical difficulties, everybody. Business owners, I'm just going to mention quickly, you can obviously go direct to business owners anytime that you would like to do that, and all you got to do is see if they need money. Very simple. Business owners almost constantly need money, especially in certain types of businesses where they've got a lot of operating expenses, where they've got to acquire inventory before they can sell it. They're selling stuff on time on a wholesale basis to some other business, B2B, and they're waiting for their money, and they're employing people seasonally, and they've got people to pay, and no cash coming in yet. And there's a million reasons why businesses need money. A lot of the time it's because they're getting ready to expand. A lot of time they're getting more equipment, they're adding on more facilities, etc. And that's a great, great source. And of course, having relationships with those business owners is tremendous, because that can lead to commercial mortgage deals as well. They might want to acquire their own building if they don't have it already. They might want to expand the building they have, do some additional construction and build on. So business owners are a great, great source. So I just want to mention this principle here that's on the screen in front of you. That is that deals lead to deals. And one of the smartest things that you can do, a really clever thing you can do in this business, is that every time you get a deal from a banker, direct from a business owner, from an accountant, whatever you're doing, it's always going to lead you to a vendor, because the equipment that they're financing is going to be new equipment. They're going to be acquiring it somewhere. So you find out where that somewhere is, because as a matter of fact, as a part of your closing process, you have to collect the invoice from the vendor, and then the funds go directly to that vendor when the deal closes, so they get their money for the equipment. The client gets the equipment, everybody's happy. Okay? So every deal leads to a vendor, and a lot of these deals have multiple vendors, so it's not at all uncommon. Maybe one vendor refers you a transaction, and you go ahead and take an application, and you find out that this particular client not only wants to finance equipment from that vendor, he also has a bunch of equipment from a half a dozen other vendors that he's kind of lumping together to finance with this application. Well, you don't know those other vendors yet, but you certainly will, because you're going to get their invoices, you're going to get in touch with them, you're going to arrange to fund to them, and in the process, you can get those vendors to now send you more deals. So you've been introduced to more vendors. So deals lead to deals. And now, do all vendors know that they need you? And the answer is no. A lot of them don't use anybody to finance their sales. Some of them just don't know that that's what's happening out there. Some of them are already doing this, and they have other companies, other sources that they're using to help them, but that doesn't mean you can't work your way, and it really is kind of the same thing as going out calling on real estate agents and brokers. They probably are already using somebody, but how can you win them over? Well, you can give them better service, you can click with them better, you can provide better products. There's a lot of ways to win that business, but that's an intro, it's a door open to go ahead and try to create a relationship with more vendors. So anyway, don't ever forget, deals lead to deals. This can really snowball. Okay? Now, let's talk about how to sell equipment financing. So we've talked about marketing. I'd be happy to answer any questions about that. Let's talk about selling now. So first of all, let me just say that the most important bullet on this slide here is get the app. Okay? So even though I'm going to show you something in a minute, we have a little payment calculator that you can go onto our website and use, and you can plug in a dollar amount, you can plug in a term, you can plug in a credit score range, and it'll give you a range of payments so that you have something to work with when you're out talking to clients or to vendors. You get a hold of somebody who wants to finance $100,000 of this or that, and you can kind of give them a ballpark idea what it's going to look like. And that's important. You need to have that. And you don't need to call us to get it, although we're happy to talk to you. We've got this calculator up there so you can actually just access that instantaneously online 24/7, and we'll show you where that is in a minute. But having said all that, the calculator is only giving an estimated range of payments. We don't know what the payment is going to be, what the quote-unquote rate is going to be. even though in equipment financing you really don't use quote-unquote interest rates, you use what they call payment factors. There's no interest rate disclosures on the contracts because in most cases it's considered to be an equipment lease, not a loan. And although the lease might be structured like a loan with a $1 buyout at the end, so essentially it really is just a loan, it is a lease and there's not a rate given. So we use factors, and you can get an estimated range of what those factors are with a calculator, but, and this is the big but, you don't really know what it's going to be until you take the app, send it in, and get the approval. And it only takes a couple hours on an app-only deal. It only takes a day or two on a full doc deal to do that anyway, and it doesn't cost the client anything. So that's the right move to make. The answer to almost every question is, Mr. Client, hey, this is about what we're talking about, but let's go ahead and get your application. I'll get it in, get it through our credit people. I'll get you an answer back in a day, and we'll see exactly where you settle in, and you can decide if this works for you. So if you do that, you're going to be safe, because what happens, unfortunately, even though you may know what their FICO score is, you may know how long they've been in business, we're going to find something when we do our underwriting. We pull what are called Paydex and PayNet records. We check supplier records. We look at the bank statements. We check the Secretary of State's websites to see how long they actually have been in business. We get surprises there sometimes based on that compared to the application. There's a bunch of places where we might run into a snafu, or it might be some kind of equipment that for whatever reason or another has some kind of a price add to it or isn't able to be financed under that program. So you don't want to commit yourself and wind up having your foot in your mouth by accident because you didn't know ahead of time that you don't really know what the rate or the payment is going to be until you get the actual approval. So remember, these are estimates only that you're going to see on the calculator. It's not, when we say these are approximate rates or approximate payments, they're approximate. So the answer to everything, get the app. That's the most important thing about selling these. It's so easy to do because we're not asking them to commit anything. They're not paying anything, and it doesn't take very long, and there's not much to collect. In fact, in most cases, especially in the small balance stuff, it takes 5 minutes to fill out an application, if that. And you need a couple of months of bank statements, but it's really, really it's a no-brainer, okay? So that's the first principle about selling this. Now remember the second principle. It's about the equipment's ROI, meaning return on investment, not necessarily getting the lowest payment or the lowest rate. Now, what do I mean by that? Well, let's say that a guy, we just financed a juicing machine. I don't even know what it was, to be honest with you. It was an industrial juicing machine. It cost like $20,000, and so we just got done docking and having that signed and finished that thing. Well, so let's say that this guy had called me and said, you know, I really need 2 juicers, because if I can get 2 juicers, I'm going to get this contract that's going to allow me to do X dollars more in business every month. Well, so if the bank requires them to put 30 or 35% down on the juicer, which they probably would and often do to get just a standard loan, and we're financing 100%, and all he has to do is put down 1 month's payment in advance, and it's structured as a lease with a $1 buyout at the end, for example, so he really owns it, okay? So with our financing, he can finance the 2 juicers, but he doesn't have the cash to finance 2 juicers through the bank. He only has the cash to finance 1. Well, he's going to bring in $10,000 a month extra because he's financing an extra $20,000 juicer. So you have to keep in mind, that's just an example. This example could be run 100 different ways to make this point, but it's about the ROI that the equipment generates. That's the benefit you're providing somebody. It's not about having the lowest rate all the time. It's about being able to provide them the ROI. So we can finance more. We're going to talk about some of the advantages here. But we can finance more. We can do 100%. We can do it quickly. We can get something in service right now. There's just a lot of reasons why we're not out there selling the very lowest rate. Now, am I saying that our rates are bad? No. The rates are very competitive for the dollar amounts that we're financing, and it's not like it's a hard thing to sell, but I just want you to know it's not about that. If you get stuck in a battle of trying to, quote interest rates and whatnot, you're going to get lost and you won't be able to sell these deals, okay? the third principle I'd mention is start with the shorter terms first. So we all are conditioned, because we're mortgage guys, to think in terms of 30-year AMs or 15-year AMs, and we're going to assume that the client wants to finance that equipment over the longest possible period of time. But I want you to know that's first of all not at all true. They usually just want the equipment in place. A lot of them want it paid off in a year or two. They just don't have the cash to pay for it right now. So go to the shorter terms when you're quoting first. And part of this is what I call the contrast principle. So even if they do want a longer term, by starting with a shorter term and then kind of taking steps back to a little bit longer and a little bit longer term, you're more likely to sell that deal than if you go out of the gate with the maximum length of term and they say, you know what, that payment's just too high. And now you have nowhere to go, so you can't sell it at all. What I mean by the contrast principle is this. A man by the name of Dr. Robert Cialdini, some years ago, he was a professor, and this is at a university in Arizona. He would sit his students down in front of 3 buckets of water. So they came into class, there's 3 buckets of water sitting in front of every chair. There was a really piping hot bucket on the right, there was a really cold, almost to freezing bucket on the left, and a room temperature bucket in the middle. And what he would have them do is stick one hand in the piping hot bucket and another hand in the freezing cold bucket and hold it there for 60 seconds. And then he'd instruct them to pull out their hands and put them both in the center bucket. And they would get this freaky, weird look on their face like, what in the world is going on? Because their brain would tell them that the hand that was hot was freezing in that middle bucket, and their hand would tell them that that hand that was freezing was warm or even hot in that middle bucket. Because of what their hand was in before, they experienced what he called contrast. So what happens in this case is if we tell somebody about a short-term payment and they say that's too expensive and we retreat back to a longer term, they're very likely to say, you know, that sounds pretty affordable, but you start at the other end of the scale to the very max and they think they can't afford it, you've left yourself nowhere to go. So you want to start with the shorter terms. Okay, now some of the advantages we have with this, again, 100% financing. They can get the equipment in use now, I mean quick now. Get it in service, start making money with it, accept contracts, accept jobs, whatever needs they have. It's a very, very easy application and closing process. I mean, we're not talking 6 weeks at the bank and, you know, 50 different pages of forms and exhaustive financial statements and back and forth with the accountant and all that stuff. They can get this done. It's easy. Okay. Another big, big advantage we have is no blanket liens. So what the bank does virtually every time they make a loan is they'll throw what they call a blanket lien on all the assets of the business. And that's called a UCC 1, and it's essentially the same thing as, you know, like a real estate lien or loan. It's secured by a trust deed or a mortgage on the property. Well, with a business, it's personal property. The business itself and all the equipment and assets of the business are considered personal property, and so they file what's called a UCC lien. It's a blanket lien. Well, guess what? What that does is it ties up that business owner so they can't ever go finance anything again without getting the bank's permission. So the bank now controls that client. So, you know, a lot of people avoid that by using equipment financing, equipment leasing, because they can go out and get another deal next month or 6 months from now. They do what they want. They don't have to ask the bank for permission, and they're in control of their financial situation. So that's a huge, huge benefit. And then the other part of this is that the banks as well, besides exercising that kind of control, will oftentimes do other things. They'll start calling lines or loans. They want financial statements every year, you know, reports and so forth. I mean, we don't do any of that. So this is just a really simple way. And by the way, one of the things we can do, and it's not on this list, but I'm just going to mention, we can actually do what's called an operating lease. The advantage to that is that it actually shows on the company's P&Ls, but it does not show on their balance sheet as a liability. It actually shows as an operating expense and not a debt. So what does that do? Well, companies that finance equipment that way are still able to qualify for financing because their ratios aren't impaired by having that debt on the books, both that liability and also that interest expense on their P&L. So what they have instead is an operating expense, just like what their, you know, office rent might be, or employment, payroll expenses, etc. So, and those don't count against them in their debt ratio. So again, equipment financing provides great advantages over a bank that way. So the disadvantages potentially may be rate in some cases, and I'm not saying all, because I want to clarify right now, on big ticket deals, we could get rates probably as low as 3.75% that are fixed for the entire term. And I can't think of many banks that could touch that. But keep in mind, this is all based on how much documentation we're providing, what the credit grade is, time in business, what the industry is, etc. So there may be a rate disadvantage from time to time, but when you consider the all-in cost of capital and that a bank wants to take 20 or 35% down or sometimes more, and we're financing 100% so that that business can still retain their capital and use it, and what's their ROI, what's their return on investment on that capital, okay, then really financing 100% is cheaper. It's just like if you were to take somebody, an investor that wants to buy an investment property, he can get a 100% LTV loan from you, or he can get a 70% loan from somebody else. And the 70% loan may have a little bit lower interest rate, but he says, man, I'd rather get the 100% LTV loan. Your rate is still reasonable, but I still have all my money, and I can go buy another property, and I can do other things. So it's the same thing here, okay? And of course, when you consider the delays in them getting the equipment in service, going through a regular bank financing, when you consider lost opportunities, when you put all these things together, what's really cheaper, even if the rate is a little bit higher, okay? So we're going to show you a little picture of our payment calculator here. I think we got one more we got to go. So bear with me. Okay, it should be coming up for you here any minute. And this is the URL to find this. It's not something you can click on a tab on our page at this point and find it. But if you go to m5funding.com, as you see in the blue there, /loan-programs/equipment-financing, and then / this little calculator will come up. We put this tool there so you'd have something that you could go to anytime, 24/7. You're with a client, wherever you are, if you've got a tablet with you, whatever you've got, laptop, you're in your office, you're at home, wherever you are, you can pull this up, you can punch in the dollar amount you're looking to finance, you can punch in the term, you can punch in the credit quality, and you can punch in the credit terms and the length of the term. And I think I said term. I meant time in business, and then you've got your credit terms: 24 months, 30 months, 36 months, etc. You get all these options, and it'll give you an approximate range. You'll see a range that pops up below, and it's not always going to fall within that range for the reasons I was talking about earlier. So I caution you, warning, don't rely on this. Remember the principle, take the app, take the app, take the app. That's the only way you can be sure. That's what you got to drill into your client's head, but at least this gives you some talking points so you know approximately where you may be, and then we can work from there. So hopefully that tool will be helpful for you, and that's available on our site for your use 24/7, okay? Now, just to quickly let you know, we are actually looking for folks who would be interested and would be qualified individuals who could rep our in-house equipment financing program in their area. We're looking for feet on the street, boots on the ground, people to go call on banks, people to go call on vendors, people to go call on accountants, etc., direct business owners who would like to represent us and carry an M5 funding card and actually be tied in with our company for equipment financing. Now, this doesn't mean that those people can't continue to operate as a residential loan officer, because we actually have AEs working with us now that do this very thing on even the commercial mortgage side. But if you know anybody that would be a great candidate for this, we would be very much appreciative if you would let us know who they are, give us a contact. We're looking for folks to do this in their market area, so that and it's a great opportunity because there's great revenue, great premiums to be earned here, and it could open doors for commercial mortgage loans. It could open doors for more residential mortgage loans. I mean, really, it's just a great way to get out and offer something that's not being offered out there. Okay? So, skipping past for a second here. Apologize, a couple of little technical difficulties today. We're going to go ahead and take a couple of questions. I don't know if there are any. I haven't been looking at that, but Carson can let us know if there's some questions here. and we can go ahead and do a little short Q&A. And oh, by the way, we have a couple of things we're gonna mention that you'll be able to receive here again at the end of the webinar. So thank you. So, Carson.
Okay, the first question we have here is from Paul. He's asking if we only finance new equipment or any options. Are there any options for used equipment?
You actually can finance used equipment. The key is that it has to be purchased from a vendor and not from a private party. Private party sales, so in other words, if someone's running a classified, says I have a backhoe for sale, and somebody buys that from the classified, I'm not saying that's impossible, but it's difficult because you have to get appraisals. It's not necessarily known if it's an arm's length transaction. It just creates a whole bunch of other underwriting snafus. But used equipment is actually fine. It happens all the time, especially when you're dealing with what we call yellow iron, which is construction equipment, because its value really, really lasts. It has a lot of tangible value, but like used software wouldn't happen. Used, hard assets, yes, we can do that. But the key is that you want it to be new to that company that's acquiring it for its use. In other words, we're not doing a quote-unquote refinance transaction, if that makes sense. All right.
Okay, we have one more question here, and someone was asking about the payment calculator URL. We'll actually send that out here in a chat in just a second so everyone can actually have that available to them in a chat link. We'll send it out. So that's the link to the payment calculator that Joe showed just a second ago. The next question is from David. He asks, in the case of a municipality, there's no personal guarantee. Expand on that personal guarantee requirement.
Great question, David, and that's absolutely right. So municipalities, there's no personal signer, there's no personal guarantee. We simply collect information on the municipality and it qualifies as an entity. That's also true. I'm just going to expand on that. We have what we call corp-only deals. So if a business has been around for 7+ years and they want to go ahead and acquire financing, but they don't want to have to personally guarantee it, if they've got a solid track record, good credit, been around for 7+ years, we don't need a personal guarantor or a personal signer on that either. So great question, either from municipalities or corp-only. And by the way, that just kind of expands. When you mention municipalities, I didn't say anything about it. It's in the originator guide. I just want to mention, think about it. Police trucks, fire trucks, street vehicles like snow removal trucks and so forth. Snow plows. I mean, when you think about what you can finance with this, really the sky's the limit, guys. So that's kind of a cool thing. But anyway, other questions, Carson?
Yeah, Jeannie was just asking where they can sign up to become an AE in New York City, Long Island, New York. If you're interested in becoming an AE for any of our programs, just go ahead and email Joe M. It's Joe M, the letter M from Artisech at m5funding.com, and one of our team will respond back to you and get you set up.
Yeah, so it's a little bit of a process, but yeah, get in touch with us and we'll get you started down that road, and we'd love to talk to you about that. So other common questions that we're getting here, Carson?
I think that that about wraps up the questions that we've received, and others that come through we'll be able to answer over email. It looks like one last question I have here is, what's the best source to use to locate vendors within a certain area? Do you have any ideas on that, Joe?
There's so many ways. Really and truly, you could drive down the street and you'll see people that deal with, tractors and trailers, and they sell forklifts, and they sell, just about any kind of equipment, trucks and so forth. So that's a great way. Literally driving around on major, commercial or industrial arteries in your area is one way to do that. But you just pick a category. Pick, printing equipment. Pick medical equipment. Pick lasers. Pick just about any kind of equipment you can think of. People that sell cubicles, office furniture, etc. And just do a search, and you'll find a whole bunch of vendors. Just act like you're shopping for equipment, basically. And you'll find a bunch of vendors, and that'll give you a bunch of people to talk to. It's really, really easy to find. Let me just say this, though. If you're new to this, I wouldn't start with vendors as my first set of contacts. What I would do is probably try to get a little bit of business from direct business owners, from the bankers, from the accountants. At least get a deal or two under your belt, or work with a friendly vendor who that you already know and get a deal or two so that you really get familiar with the process from start to close. And that way you'll be able to set better expectations, because with the vendors, it's kind of like with your realtor relationships as a residential LO. If you take a chance, if you don't set it up right, if you don't set the right expectations, you might blow that relationship. Of course, having said that, if that's the way you can go get the business and you burn a relationship learning the business and you go get 20 other vendors after that, oh well, there's really no shortage of folks to deal with. So it's just a little idea there.
Okay. We still have questions coming in. So Gene is asking if we can advertise this in local papers, or ideas to advertise the equipment financing program in your local market.
Yeah, you're perfectly able to do that. I don't know firsthand how that would work, because I've done about every kind of marketing for commercial mortgages you can imagine, and I've done a lot with this. But with this, it's been primarily either direct to business owner or referral based. I haven't done what you call advertising per se. I know that that has worked for me in the past with commercial mortgages. You could try it. There's nothing wrong. We don't have any prohibition against doing that for the program. And even as an AE, if you wanted to do that, you're perfectly permitted to do that. But I don't know how it'll work, so that's just my disclaimer. I'm not sure what the return on investment will be for that. One thing I will mention, let me just kind of give you a little secret weapon here. Those of you that happen to be in the western states, and if you're not sure, we have kind of a footprint where we have an extra little product. It's a line of credit product. We don't make much money on it. It's at prime plus 1. It's 4.25% interest. It's unsecured. We need no doc to set it up, no financials, no tax returns, nothing, up to $100,000. And it's what's called an evergreen revolving line of credit. And a lot of businesses, when you say, hey, would you like a $100,000 line of credit, unsecured, no taxes, no tax returns, no financials, a lot of them are very open to that idea. That's only available in certain western states. So if you want to find out where that's available, you can email us separately. We'll let you know. But what I do with that as a lead, talking to a business owner, is I say, yeah, I want that. And then we talk for a few more minutes, and I'll say, hey, great, what are you going to use the money for? And a lot of times it comes out that, actually we need to add some more booths in the restaurant. We need to put another couple of refrigerators back here, and we're going to add this and this and that. And so I go, oh, great, well, guess what? We can finance that on our equipment finance program, and we can still get you the line of credit to boot, so you'll have that available for working capital when you need it. So I use that as a door opener because it's a really, really attractive product, and it's unsecured and it's easy. And then that kind of leads to what other uses they may have for the money, which could go to equipment. It could go to an SBA loan on a building. Maybe they're doing expansion or something. So that's just a little trick. And if you want to know where that line of credit product is available, just kind of send us an email to the joem@m5funding address, and we'll let you know.
And I think this will be our last question. Ray's wondering whether or not the municipalities and cities are actually tied in with the banks, or how you go about finding opportunities there working with community banks and things.
No, you know what? Some yes, some no. A lot of times they have to finance stuff different ways because they didn't have it accounted for in their budgets or allocated. I just had a conversation with the municipality yesterday that wanted to finance some water meters. So no, those deals are out there, and it's actually a huge business. It's a huge industry to finance for municipalities, and some people in the industry just specialize in just that. That's all they do.
Okay, great. Well, Joe, we really appreciate your time and the information that you've been able to share with everyone. And we're coming up on an hour now, so we're going to go ahead and close. If you have additional questions or you need help with anything, just email our team, joem@m5funding.com. You can visit this URL to access the copy of the originator program. Just go to m5funding.com, look at the forms page, and it's the very last link on the forms page currently. It's the originator packet. You can download it there. We'll also be emailing you out a copy of the YouTube link for this webinar today, along with the link for the originator packet. So thanks everyone for being here. Thank you, Joe, and I look forward to further webinars coming up in the next month or so. Thanks a lot.
Let's talk about beyond what it is niche. Okay.